let me know, and just by typing in Y or yes, and that's also going to be the place where for today's call during the Q&A. I guess really it's all Q&A. You go ahead and use the question box. Let me know what's on your mind. That's what we're here for, and certainly want to take this opportunity to make this as useful for everybody who's in the room here today. If you're watching here on demand after the call, welcome you as well. And if you have any questions, certainly feel free to reach out to us, and we'll be happy to help. Okay, well, I think we are all set to go. Had a reasonably I don't want to say choppy, but just relatively low volatility trading session today. We actually can see here in the indices. So just taking a look here, let me start with one, just to make sure that I see a few people who may just be joining this call for the first time. So what this workspace is set up for here, I've got the ATR down below. And the way this is set up, and if you're interested, you can set it up this way. Just throw on the average true range onto a daily chart for the products that you trade. And this is really more relevant to intraday trading, but if you apply the same sort of logic to sort of longer time horizon, effectively what we're looking for is volatility, and easy way for us to measure it for various products, probably even better than or more relevant to us than just looking at the VIX, although a lot of times it'll tell us kind of the same picture here for the S&P. But we're looking for volatility. We're looking for price action that's going to give us opportunities to trade, that's going to give or that's going to make the market more forgiving when prices are being discovered, and we're going along with the price and looking for a market direction. If it's starting to trade higher, effectively what we're looking to do is we're looking to find a good entry point. We're trying to find a good low-risk entry point where we've got the probabilities in our favor, market's shown us by price discovery that it's going in a particular direction. And if we're able to recognize that early, we may have an opportunity to profit from the continuation of that move. And of course, what we're doing is managing risk. But all of that really comes down to, or the success of that really has to do with whether the prices are moving at all. So this number here gives us a good idea of where that is. That's the blue line over here. Today that's reading like just below 15. So on average about 60 ticks of price action. All right. Over here I've got another one set up. This is another ATR, and it's just drawing the one. All right. So that one bar. So the blue line there is just normally what you'd see is just an average. And then today we had 16, so just actually a little bit better than 60 ticks of price action. Now for us, typically what we like to see for trading is really as our sort of rule of thumb is 80 ticks of price action. So lately, a lot of the markets don't really fit that, and while that doesn't make it so that we can't be involved, it certainly makes things less forgiving. And the idea there, if you think back to slow periods where market price action is very limited, is a really good example of that. If you traded back in 2013 or 14, when the price action was very limited, and markets would open up, it'd be flat all day. So even though the market was up a lot over that course of that year, all the price action, or most of the price action you'd find was either very gradual or it'd be overnight, where you'd open up on a gap and prices would trade in a 5-point range. And if you're a trader in that price action, any amount of risk that you could lay out, even any sort of reasonable amount of risk. I mean, if we're talking risking as little as a point, that would be a quarter of the price action. Or a quarter of the range. Obviously, that's not the case today, but it's still relatively limited. We're still looking for, as you said, the rule of thumb is we'd really like to see better than 80 ticks. And so this average even is actually lower than that value here. So for ES, we're looking for 20. NQ, we're looking at something better than that, so that's fine. And incidentally, we're also seeing something set up here toward the end of the year where prices in NQ on the daily chart, incidentally for the swing traders who are in the room, or of course I don't really want to make such a strong distinction, because if we're looking at the markets, we will have to trade the opportunities that exist. So some people don't like to take overnight risk. I think that there are different ways of expressing the trade. So if the leverage has you feeling like you don't want to be involved overnight in futures, you can get long some opportunities just depending on what exists, right? So clearly right now the volatility is suppressed, and we're finding ourselves smashed up or smashed down below that well, I guess really it's not in the market that we're looking at here, but in the Dow. But just generally, the stock market's trying to break higher here for the in the new year. It's had a little better success here in NQ. We saw that here, not just from the function of where it's gone. That's sort of a results-oriented thing, but this gave us a really great low-risk sort of setup as prices came down. So take a look at the NQ sort of swing trading time horizon or workspace that I have set up here, and we can talk about how really we're going to be applying the same trade logic that we used from the intraday. It's just on a longer time frame. So if we're looking at 3 and 9 for a lot of the examples here, we're going to switch it over to, well, actually, I'll show you my workspace there. We'll have something like this. Now, obviously, this is maybe, if you're seeing this for the first time, might immediately seem like there's a lot of stuff here. Really, what we're concerned with here is really like the weekly chart, right? So as we saw here, major trend direction is up. I pointed out earlier that the daily chart is or was at weekly support, so we saw that already. And during that period of time, so this was at the start of the month. If we take something like our 30-minute chart, that's sort of a swing trading time horizon for, initiating positions. This is about that point in time, and if we're looking at it at a long entry, the blue is going to give us our signal to buy. We can see that the risk on any sort of these red bars is going to be very limited, but clearly those are going to be against the major trend direction. So particularly when the prices are close to support, we're not looking to try to short it there. We're going to be looking for chances to buy. So here and here, and here, and all these opportunities to try to buy. Now, as prices start to go higher, you can see that the dots are moving up and managing the risk out of the trade. We're going to have opportunities also to secure profit along the way and potentially manage the risk on a looser leash. I mean, as an example, if we take a look here, if we looked at some sort of entry around here at the 4,900 level, we are going to have a chance maybe a couple days later to see that support even on this longer time frame chart is going to be securing profit. And when you have a position that's profitable, you have the luxury really of choosing if you want to potentially manage to trade on a looser leash. Obviously, there's the trade-off. If you have a tighter leash on the position, right, we would secure profit, we would get out more quickly. But if prices are running along, that's oftentimes really what we'd like to see. It gives us that asymmetric reward. So if initially the risk was, let's say, 10, 15 points here in NQ, well, since then, prices had gone up, from down here, prices had gone up about 150 points, right? So that certainly makes things, makes that initial risk scheme, really inconsequential. Obviously, not all of them pan out to this big winner, but if you've got the profit factor in your favor, so referring to the size of the winners. Actually, that's not the profit factor, but I'm just using that as a term. We're looking for bigger gains, obviously, and smaller losses. The asymmetric, favorably asymmetric setup. So I guess I just started there. We can come back over here and take a look at the intraday price action. A lot of times I start over here, and we see here from overnight. All right, so from overnight, using midnight, this is Pacific time, but coming into the open, the Russell was actually the strongest. So the red line here is the Russell. This is just a percentage chart, so anything can do this, right? You just draw the the price action. I've got the Dow, the Nasdaq, the Russell, and the S&P, all E-mini products, and just have them plotted against each other. And at the start of the day, the Russell was the strongest. It shot down at the open, or maybe prior to the open, I think. Let me see. Yeah, basically shot down at the open, and then bounced up and ended up on the day the strongest. Sorry, I didn't mean to make that kind of bounce around. Ended up the strongest. Now that is, not necessarily too meaningful today because the market was only up slightly, but many times you can see a really big separation. I mean, in fact, we do see a separation here. So from the start of the day, that the Russell here ended up up about 0.8% relative to 3 or 0.4%. So really almost twice as much price action there. And why don't we take a look here? I've got a workspace set up. Crude has been seeing some price action. We have some news out this morning, and the market really reacted to it. I'm going to talk a little bit about news because sometimes, let's see, when's the next? I'll have to get my calendar out, but every month, start of the month, we get unemployment numbers. Every Wednesday, we get crude numbers. Any of these, sort of big numbers are known catalysts. They're going to affect the market, and they affect it for us in two big ways. So first of all, the price action a lot of times is really muted for intraday trading, leading into that because nobody is making any big moves just hours before any sort of big event, like the Fed, Fed minutes, any sort of thing like that. Incidentally, Fed minutes was it last week or a couple weeks ago, was almost like a non-event. It seemed like no reaction from the market. It was interesting to see. What was I saying? We can see here crude last couple of days has been breaking lower. Today we had a bounce, major turn direction is just starting to break support there. And if we take a look at something just slightly longer term, we're just starting to see here prices are starting to reverse this downtrend it's been in for the last couple of years. I think there's certainly been a global effort to try to stem the low crude oil prices. Obviously, that's a problem for some people, not for others. But for us as traders, we are looking at so in the daily chart here, right, prices just turned red. We have resistance above at 5 points, or excuse me, at 53.5 roughly. So there's a little bit of room for prices to continue up a little bit further if they want to continue up, next couple of days. If they want to continue down, there's all that room down to the lows, and plenty of room for prices to continue down without really affecting this trend that has been what we've been observing, right? So clearly, here's the big break to the downside, sort of long-term trend, and recently we've been seeing just gradually prices, trying to fight to get above that that significant price level. I think the point everybody's kind of paying attention to is, $50 plus or minus a point or two, and as long as prices can stay above that, they're looking to turn around the downtrend that you've seen. And if that does in fact is if that is in fact the case, we're going to see something relatively interesting. Crude over the long run has been, let's get a little bit more long run than that. Has been a very interesting product, certainly one that has let people really over or underestimate the amount of price action that we can get. So clearly back here when prices were low, people thought prices would never break 100, and clearly they did. And once they broke and they were shooting up to the moon, people thought that 200, 300 was easily possible, and we had this sharp reversal. Crude for a long time was very flat, but this period of time also came with really strong volatility, so high average trading ranges, so it was a very good product to trade, and it remains so. I mean, if we take a look at the intraday the daily chart of with the ATR, and we're still seeing, today I had a 2-point range. Obviously that's huge, 200 ticks, but on average still that blue line there is 0.3, 0.3. So or about a third. So let's take a look at today's price action. And coming into news, we always want to, point out a couple things. So first off, this period of time, we're going to expect relatively lighter volatility. If we have trading opportunities, which in today's case, it really wasn't, too much. I mean, if you're trading this early, so this is 2 o'clock Pacific, which would be 5 Eastern. If you're trading this early, a lot of times there's not a lot of price action there. Sometimes, if there is, I mean, let's say, for example, here prices are testing at the 9-minute support, the guidance support here. So we have the overlay here. Let me know if there's any questions about what you're seeing on the chart visually as far as like signals or any other questions. Julio, thanks for the question. I will get to that in just a moment. He's asking to take a look at ZB. I think that was certainly been the most interesting product recently as far as a swing trade goes, and right now it's sort of an interesting spot. I think that I think we're still below weekly resistance, so that really actually is going to set up for an interesting thing, right? If our price is going to reverse, or are we going to see a continuation lower? Right. Here, as prices are testing that that 9-minute support, as they bounce off, this is the point where it's turning blue, where that dot is, and then the close outside the bands certainly makes this a little bit more difficult to trade. And it's just a spike of about 20 ticks there. So certainly enough risk that makes it unfavorable. But after prices pull back here, this is potentially set up, and then, if this were to continue on further into and prior to news, clearly if we are trading this product, we should know there's news coming. There's a scheduled catalyst, I should say, and when that's the case, certainly take it off the table. I mean, you don't want to, have to guess, because when we get those, when we get the news, a lot of times, like I said, there's certainly the exception to the rule. Like last week on Fed Day, we had basically no reaction, but a lot of times we will have prices just run stops on both ends, and it's really difficult to have a significant stop. So a significant stop meaning one that's wide enough that it's meaningful, right? Because the noise just gets so big, right? So the range expansion just takes out both sides, and then ultimately, a lot of times it resumes, where it's going to go. But I've been, I mean, certainly, if you're a swing trader, that even a position that you could have, several $1,000s open profit on a position, could just get wiped out by, reaction. So, a function of, respecting the, how noisy the market can get at that point in time. And a lot of times, if we don't want to deal with that volatility, we can kind of figure out where it wants to go. If we've got the position on from long enough in advance, it's going to, or if the position is, sized correctly, right? So not leveraged in a very serious way, then we're going to be able to deal with all of that a lot better. Anyways, coming into this, no positions, right? Not really any positions. Buy signal here down below resistance. It was trying to get through that for an hour or so. It did pretty sharply, and then was flat into prior to the news. Same thing with this short signal, the red bars here pulling back to resistance and trading lower. It was a nice move. It was about a 30 or 40 cent move, but no continuation. And here, as prices were testing resistance, if we were looking for that trade in the first hour of the day for prices to continue lower, that would have been the time to look for it. We never got it, but it's good that we have that, right? We know to be looking for something, but it just didn't come, and prices break to the upside. So here's news, right? Big spike to the downside, and then it takes out both ends. So if we see, how wide this sort of range expansion was, you can see how there really wouldn't be any way for an intraday trader to have a stop that's significant. You're going to get run out either way. So if not that there was any sort of positions that, or open profit on a position like this today, based on what we can see. Sometimes you do. Sometimes you have that move that you're in, an hour before news or a couple hours that's been setting up before news. Take it off. Be extra vigilant about taking profits off the table. If we didn't have resistance here and we had the long position, from here to here, it's 30 ticks. I mean, certainly $300 per contract is nothing to sneeze at, but and it's outside the band. But especially on a day like today, don't let it go for nothing, right? So this is point and a point in or 120 ticks of price action just spiking like this. And you certainly know that the fills are going to be really sloppy during that period of time. Anyways, let me try to get through this quickly so I can get to your question, Julio. So as prices are setting up, we know the major trend direction is up. We're looking for a good lower risk entry point. It's a little difficult for me visually to, especially now after the fact, to tell you here, right, buy it. 51.70 and 7/10, right? Prices did pull back a bit. If the risk and reward is reasonable to you, so that's a judgment call at that point in time. But if we're getting in somewhere around here, and the risk, I mean, if we're going to set it there, right, it's going to be nearly 30 ticks, and prices can only continue up around 10 ticks. You can see the sort of asymmetric setup there, where it's not that prices can't continue up, but they need to break through the highs. And if they get up to the highs, a lot of times you'll see this, prices get up to the tick and then turn around, well, then you're going to be in trouble. And you're going to be looking at no chance to be able to scale out, right? Because you're not going to take it off for 10 ticks if you are risking 30 at the outset of the trade. And if it turns around, you're going to have to take the full loss. All right, so if prices are going to pull back, or if prices can pull back, a lot of times nominally the price will be higher, but at a point like this is a lot easier to, easier sort of trade setup, right? So today it's still a little bit less than what we were looking at before, but also a little bit more favorable risk and reward. Also, on following sort of news like this, I mean, you can't be quite as picky, but it's sort of just a risk and reward sort of thing. So clearly we see here the major trend direction is up, right? The break to the downside, the move higher, and then the pullback, and then continuing up tells us that here, when we get that pullback, that's the point to look for the entry. And we see here relatively quickly the dots moving up. The risk is almost out of the trade. So even though there's just a bit of open profit here so far, it's about, actually not a bit, it's about 60 cents of profit, open profit, or actually not 50, it's not 60, a little less than 50. Still $500 per contract at that point in time. And you can see the risk coming out further and further, and then there'd be the exit here. You can have a chance to look for continuation, which doesn't come, basically flat through the rest of the day. All right, so yeah, I am almost out of time, so let me make sure I get to the question. Let's do this. Let me grab this workspace here, and so we can see what's going on and everything. So first off, major trend direction. This has actually been sort of a reversal story. So it's really, I mean, been a long-term story, the bull market and bonds, but following the election, we had the sharp break to the downside. That has taken out a key support level. Doesn't mean that prices can't continue up in a meaningful way. Certainly, as prices break the lows, so we can see here, prices, just taking out or getting to very close to the low that we saw back in June. Of course, this is the continuous contract, but we're looking at 147. And it just got down below that just by a touch. That might be a little sloppy if we're looking at the actual contracts or the monthly contracts, but we just get the general sense that prices have taken out the lows, but doesn't mean prices can't continue up. Right now, the sort of roadblock that's in the way of that is here at 155 and around 2/3. Well, anyways, there's some room for prices to continue up. Looks like about 3 points. we see in the daily chart here, the setup here from back then, right? So when prices were up above support, give me just a second. Let me write back to somebody. Okay. We had support here on the weekly chart back in back last year at around 168, right? So if I draw a line there at around 168, which is here, right? We saw the sell signal start to come in, broke out below that, pulled back, right? Not an insignificant pullback. As we always kind of see, when prices make the initial break, a lot of times there's a pullback from the low here, see 164 to a 6-point bounce, right? But after that, we saw here from just below that line with the red bars coming in here, really the most interesting move of the last few months, really, and actually didn't even need the catalyst to really get started, right? So we see here following the election, the real continuation of the break, but really had a month to set up the trade, and leading into that point, there was already $6,000 open profit per in the position per contract. Anyways, blue bar here. If prices can continue up, right? So we are seeing resistance here. Let me just get the value. All right, so we're seeing resistance here around 155 and 6/10. So if I draw a line there, 155 and 6/10. I haven't worked with 30 seconds in a while. Sorry. All right. So we're looking at just a little bit of room for price to continue up. If we're looking at a trade, I still think that, if prices can pull back a bit to, down toward where that daily support is, I never like to really, just try to jump in on the buy signal here, especially if it's going against a major trend direction. If prices can pull back to around 148, look for a short-term buy signal that, if prices put in a high somewhere here, that's going to be good for us, right? I mean, the high currently is at 153, so if prices pull back, 3 or 4 points, if you're able to find prices or if prices are able to find support somewhere lower, and we're able to look for an entry to try to take it back up from around 149 up into that high, well, then you're going to be able to have 3 or 4 points open profit. By the time prices get into that roadblock, that sort of high that everybody knows about, everybody sees the high, and it'd be good to have that open profit so that by the time you get there, if you want to take some off, certainly that makes it, that's certainly not a small amount. And if prices are able to break up through that, there's another about 3 points that price, or 2 or 3 points that price can continue up into the resistance before it really has to make a strong move to the upside. And certainly if prices need to come back in a really deeper retracement to the monthly dot here, right? That's like way up there. So we really don't need to think about that, immediately now. But if we get to the point here where prices are, touching weekly resistance, if you have potentially a long position, that's sort of the relatively shorter term trend. Intermediate, as far as what we'd be looking for, if we're just looking at daily and weekly, based on what we normally talk about. If I were just to do, if I were to just change this to, ZB, and we change the longer time frame to, weekly, and the shorter time frame to daily, and we see like this. All right. Well, there's a little bit of room for price to continue up, but we have a no trade zone, right? Blue bars going into resistance. If prices were able to continue up a bit, if they were to roll back down, that would be an even better opportunity for us, or that's really what we'd like to see. Although the move to the downside has been relatively parabolic, right? So, basically since a little bit before the election, like we said, right? It's just been falling off a cliff. So if it needs to, at least cool down, if it just needs to like sit here for a little bit, there may not be a specific price direction that we're looking at here, at least in the interim, right? So the question was, what's the intermediate trend? If we're looking at the next, 3 to 6 to, 9 months, could just be sideways. So it could just be looking at noise. But as if we, we're not here to predict whether or which case it is. What we want to do is if we want to be involved in this market, which could potentially have, a lot of price action, we just want to look at it in terms of the actual trade setup, right? So if I can set up a trade where I'm coming off of support here and there's 3 or 4 points up to just the high, that certainly can be noise, right? So if prices here, right, are just going to continue on for months in this trading range here, right, of 4 or 5 points, well, if I can get it from the low and up into the high and have 4 or 5 points open profit coming into the top of the range, well, then you're in a great position to say, I'll take some off, and then we'll see if the remaining exposure is going to benefit from, a reversal. Or alternatively, if prices get up to the resistance and we have no position, or whatever, we're coming from, an observer standpoint, what you're looking for is for prices to roll back down the other way, and to trade into where this daily support is. And if prices were up at 155, trading down into 148, that's about 6 or 7 points down toward the next roadblock. So that also would potentially set up for a very good trade setup. So depending on where you kind of come from, as far as what your bias is fundamentally, might lead you to look for the long or the short position. I kind of feel like, since I try not to really let well-sounding ideas kind of cloud my judgment for trades, if I see a good long setup, we might take it up to the resistance and then take it off enough that the risk is out of the trade, and then you have that basically that free run. All right, so I am almost out of time. Well, actually, I am out of time. Paul has a question here. Can you send me the setup for the intraday percent chart? I will send that over to you right after the call. And if you have any questions, just write me back. Basically, real quick, just so it's a little confusing to write about. What you'll receive is basically like this. If you need to change the symbols, just come up to Format Symbol and change the symbol formatting. And then clicking over here, percent, right, we can kind of pick where we want that 0 point to be. So right now, obviously, we can't see what's going on in any of these. It just looks like a flat line. And I can just pick, here's the, midnight point. Here is the open, right? So if I pick the open and just kind of see as the day kind of goes on, what's happening with these products. So we saw the Russell broke sharply to the downside first, and then kind of was in the middle of the pack, and then somehow at the end of the day ended up the strongest. I noticed that I just realized that we didn't really talk about it today, but real quick, this is what it looked like if we could have basically just using the same best practices that we talked about in all the other charts. If we could have avoided losses, that would have been really the best that we could hope for, since the range was, even the Russell was 5 points. So support bouncing off, looking for a move higher, didn't come, breaks the downside in a sharp fashion, and is outside the bands. The pullback, it's sort of against the major trend direction, looking for the uptrend to continue. It takes out the highs, right? So it takes out the intraday high, pulls back, and then finds what is going to be the intraday high of the day, and then turns around. But at that point in time, we'd be looking at about 4 points open profit, so about $200 per contract. If we didn't see that as a reason to take some profit off the table, well, then we would really have to have, gotten a scratch. But if we took a little bit off, the net exit would have been just slightly higher. The red bar here, going against the major trend direction, we see a sharp move down, right? It's, parabolic move down, and then the pullback, and then coming into the remaining part of the day. If we looked at this, we have a sell signal set up. If I draw a line here from, potential entry points as prices are testing resistance here, right, we would have seen potentially a little bit of open profit again, about 5 points to the downside, and then here, if we didn't take it off, it would have been a scratch again. Here we see a no trade zone, but again, I used to kind of like to say this. I mean, I don't think a lot of people like to look at it this way, but if we have an entry here and we can see the risk is down here and we have a roadblock here, prices are able to continue up into this point. And so really, right there, it's about even when it first comes in. If we're able to see it down here, right, if we're able to see an entry down there, well, then the risk and reward is more favorable. And prices, get into the resistance, pull back. You can see here's, the setup afterward. So afterward, right? So if we looked at, instead of an entry down in here, we got a second chance and took it into the close. That was actually not a bad trade. That was about $300 per contract. All right, anyways, take care, everybody. Have a great rest of your day, and we'll talk to you later.